All right, I've been keeping track of these doom and gloom headlines for years now, and since my last doom and gloom headline video, these experts continue to be completely wrong. They've been wrong for the last 11 years now. We finished the year with the S&P 500 total return index up 31.5%. But let's have a look at some of these headlines. The bond market is flashing its biggest recession sign since before the financial crisis. 2/3 of America's CFOs predict a recession by the summer of 2020. Well, they're running out of time with that prediction. One of Wall Street's premier investors says S&P 500 may tumble 16% by summer's end because markets never had a trade war like this. And that never happened. In fact, stocks immediately went straight up 10%, and the S&P finished the summer up 6.35%. Morgan Stanley tells investors to play defense as cycle indicator flashes downturn. A shift to a downturn phase has historically led to lower returns in the next 12 months. Since this call for defense, stocks have only gone up 15.25%, not including dividends. The Fed may break a lot of stock market investors' hearts this week. Nope, stocks only went up. Brace for a second wave of stock market volatility that could be Lehman-like, says Nomura. This was a terrible time to be out of the stock market. The Dow went up 6.68% from mid-August to mid-September. Trump's war on the Fed could shatter the stock market. And again, the writers for these financial sites are left-wing never-Trumpers. And here we go, Morgan Stanley again. Stocks could fall another 8% as Trump put and the Fed put expire, says Morgan Stanley's expert. Wrong. Stocks traded as low as 2.6% lower and as high as 2.9% higher. A sell-off worse than December can arrive in a week, says analyst who is predicting Lehman-like drop. Also, uncanny resemblance between now and 2008. Fail. That week, stocks spiked up. September is the worst month for stocks, and it's even gloomier after a downbeat August. S&P on average falls 1% in September. Well, wrong. This gloom never happened. The S&P price return index ended the month 1.7% higher. Stocks could drop 20% after an October disappointment, strategist warns. The next 5 to 10% move in the stock market is more likely to be down than higher. Well, so much for that prediction. Expert who called the 2008 crisis says repeat of December 2018 meltdown is inevitable. Yeah, look at this December meltdown that ensued. Stocks are likely to slide in the coming weeks until the end of the year because market timers are too bullish. Well, there you have it, a trip down memory lane. And now is probably a good time to remind people about what Peter Lynch said in his book, Beating the Street, and that is to avoid weekend thinking and ignore the latest dire predictions of the newscasters. In other words, stick to your predetermined stock-bond allocation ratio and resist the urge to time the market, because there's always a barrage of false alarms. And all these experts are just guessing.